to Tradespoon and Yellow Town. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Welcome on Discord. Welcome on YouTube. Appreciate your time. For those of you who are new, welcome. If this is your first live event, do me a favor, just in comments, type in first. My background is technology. I was a CTO of several financial startups here in Chicago. Started Tradespoon about more than 10 years ago, Yellow Tunnel more than 4 years ago. Want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risks and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into current market conditions, CPI data today, PPI data tomorrow, let's just review main concepts in trading psychology. Very important to have a trading plan that's in writing and maintaining journal. In a trading plan, the key features or the key pillars of any trading plan, I think, should be risk management, right? How many positions do you have? How much cash do you have? And how much risk you're willing to take per position. If you're new to trading stock or options, I encourage you to consider having only 4 positions at a time and maximum loss of 2.5% of account value. So this way, you know your drawdown can be no more than 10%. Right? Market has been neutral, I would say. Right, trading in a range, it will either break to the upside or it will break to the downside. Right, I'm more bearish. Some people are more bullish. Nobody knows exactly. It depends on the data, right? The data that we receive, such as CPI, PPI. Then we have ECB decision, Fed decision next week. So there are a lot of uncertainty in the market. So it's very important to concentrate on things that are within your control, right? The economy of control basically says, what is within my control? Within my control is determining position size. Why is my computer not working? Okay. So you look at spiders, right? Let's say you're buying spiders, or you're buying stock or options or ETF, futures, Bitcoin, whatever you're buying. You look at the chart, right? And you decide support and resistance levels, right? Spiders is fighting for the 50-day moving average, right? It's trading right now below 50-day moving average, traded above 50-day moving average. So if you're buying, right now we're sitting right at this key support, 444. So if you're a day trader, you might say, okay, my first line of defense is last week low, right? If we breach last week low, I'm out, right? For day trading, it's not that far, right? So 443.5, if you're buying at 446, then maybe at 443, you're out. Maybe a stop loss, 75 basis points, 1%, right? 442, 443, I'm out. And positive visualization, you think we're going to reclaim 50-day moving average and get back to 453, right? We had CPI data. I mean, it came in a little bit slightly higher than expected, probably mainly due to energy prices, higher oil. The yield is not moving, and at least for now, right? I mean, still early, but it's fluctuating. It was up, it was down, so it's kind of trying to find support. Dollar not going anywhere. So for now, not a big reaction to the news. Everybody got what they want, and now they kind of, bulls and bears are figuring out what's next. So that's your support number 1. Maybe 3 to 4 points. Let's call it 4 points. 1% is reasonable. And then if you're holding position a little bit longer, right? Maybe you say, well, I don't know what's going to happen today, but there's PPI data. Then Powell will speak, ECB, and then you think that Powell is going to say same thing, right? Let's say he's bullish. We can avoid the recession. Economy is resilient, and unemployment is low, and we're happy. So then the stop loss, and you think we again either reach 452 or maybe even retrace to the highs, right? Depending what exactly he's gonna say. Right, this is your resistance 1. resistance too. So then the stop loss, you're buying at 446. So, I think the line in the sand between bulls and bears is 432, right? We've tested it in August, successfully defended, right? This is close to June lows. We've been at this line many times in the past couple of years. So bulls are in control as long as we're above 432. If we drop below 432, I would say bears are more in control and probably will retest 200-day. This opens the door to 200-day moving average basically. So that's your support number 2, right? Support number 2, support number 3. So that's the stop level: 445, 432. That would 446, let's say right below 430. Let's call it 15 points, right? Stop loss. So that's positive and negative visualizations, and you don't just want to say 15 points, 4 points. You actually want to think about how will you feel, right? So trading psychology basically encourages you to be more self-aware and ask yourself the question: if you're bullish, how would you feel at 432? Or if you're bearish, right, how would you feel if the market is at 460, right? And not just feeling, you're happy, but the feeling is, imagine how many, look at your position, try to figure out what, maximum loss, right? If you have, let's say, 4 bullish positions and you say 2.5% each bullish position, you're down 10%, right? This is how you feel, right? And if this is not a comfortable feeling, right, and you feel maybe concerned, anxious, well, then maybe out of these 4 bullish positions, have one as a hedge. At least this way, you know that you're not going to be down 10%. You're going to be down 7.5% on your bearish position, and you're going to be up 2.5% on your bullish positions, right? You can close your bearish position at 432 and make a decision: do you want to add to the bullish? Do you want to subtract? But you're minimizing your losses, right? So these exercises are extremely helpful, and I encourage you to do this. And then in terms of risk, on $10,000 portfolio, I propose not to risk more than $250, right? 2.5%. For day trading, $25,000 portfolio is minimum. 1% would be, less than 1% would be also $250. So if you're doing day trading, I would say 4 shares and you multiply by 60, right? It's 240. This is, you can afford to have 60 shares. If you're doing day trading, you're going to close position by end of today, not wait for PPI data. If you are going to wait for PPI data and Fed decision, then 15 points is 15 shares. 259. So that is the most important exercise. This is the most important skill, right? It sounds easy and it looks easy, and only spend 15 minutes, but it takes months, years to internalize this information, practice this information, and make sure that that's exactly what you do, right? Because sometimes it's one thing to say something, another thing is to do the same thing, right? So that's the practice. Meanwhile, spiders are up, QQQ is up 20 basis points, SEM is up 20 basis points, VIX is complacent 14. Not much price action and yield, not much price. So it's people are scratching their heads. Okay, what's next? Well, what's next is PPI initial jobless claim. Last month, I think it was the same thing. CPI wasn't a big deal, no reaction, but then on PPI market moved, right? So it could be the same thing like in August, right, where CPI came in kind of as expected, but PPI was significantly higher last month, and that's why market pulled back. So that's the next trigger, right? If we're not going to move on CPI, next trigger is PPI, earnings kind of still in question, and then we have ECB and Fed decision next week. So those are 2 triggers, right? 2 triggers, and for now, bulls and bears are fighting for 50-day moving average, right? That has been kind of the theme since the initial pullback in August, right? Okay, any questions? Fred, Michael, Bob, Mark, Bell. Okay, John, welcome back. So in terms of Tesla, again, my personal opinion that the risk is to the downside, right? Tesla has significantly moved higher, right, on the upgrade. I've done some reading, the idea that they have AI models to help with learning, right? Learning and self-driving cars, self-driving taxis. At what point they will, it's not like they have, they just implemented this AI. They've been, I have Tesla for the past, since they went live, not almost. In Chicago, one of the first cars. So I don't think it has any material impact on their current revenue or the revenue next quarter. So market is oversold. You have this upgrade, it goes up. Next time they cut the prices in China, it's going to go down. I don't think, Tesla is going to go too far from NVIDIA or other, Magnificent Seven stocks. They're all under pressure, right? Some of them are fighting below 50-day moving average, or like NVIDIA, Tesla is fighting above 50-day moving average on the upgrade. I think they're all gonna move as a group. Some maybe outperform, right, based on earnings. I think if I have to pick one, right, Microsoft is at 50-day moving average. If I have to pick one, I would pick Google. Right, stocks that are strong, that are at least above 50-day moving average, and their uptrend is not broken. Right, at least you have strong support at 50-day moving average, and earnings reaction is positive. Right, so I would go with Google because if we do have a pullback, probably Google is going to outperform the rest of the stocks, and probably stay away from stocks like Apple. Right, that's trading below 50-day moving average and basically retesting pretty important support, right? August low, right? If you can't hold the August low, then the next level is 200-day moving average, which is 160. You could drop another 10% if it doesn't hold these levels. So those are the Magnificent Seven. I would kind of. Fred, thank you. Thank you for kind words. Right. You want to be flexible, right? You don't want to be married to your position. And you don't want to be stubborn either, right? Sometimes, like personally, I'm a very stubborn person. So it's very hard to change the position. But you got to look at the data, right? And if there's a trend, like Apple was an uptrend, there was no reason to fight it in March, April, or May. Once the trend is broken, here, there's no reason to get overly bullish until you establish an uptrend. At some point, Apple will establish the uptrend, right? It will get above this trend line. But as long as it's below this trend line, below this recent highs, all-time highs, then you just don't know, how low it will go, right? It could stop at 176, it could stop at 160, it could stop at 150. Nobody knows exactly where it's going to stop. But the trend is broken, right? That you don't have to have a lot of experience in technical analysis. All right. I would still at this point review the position, right? I think bulls and bears are going to fight it. Let's see, what is it? Nothing has changed really. QQQ is slightly up, Spider is slightly up. I'm following seasonality, right? Seasonality doesn't always work, right? I follow seasonality in May, didn't really work out that well. But at least for now, correlation 81%. Usually starting this week and next week, especially if you're Jewish, so there is a saying, sell in Rosh Hashanah and buy in Yom Kippur, right? Sell on New Year. Everybody who's observing New Year, happy and sweet New Year. That's starting this weekend, right? And then a week from now, the Day of Atonement, right? And so, statistically, it's a little bit better than a flip of a coin. It doesn't always work, obviously, but when the correlation is high, it may or may not work, right? You don't know. But so I'm following the idea that September and October is going to be volatile going into the earnings, and then once earnings season starts, middle of October, beginning of November. Microsoft announces earnings, Apple announces earnings, JP Morgan announces earnings. Everybody will will look at the glass half full, right? So starting in end of October, people will look at the glass half full. And for now, they're still looking at the glass half empty. Right, high inflation, high interest rates, etc., etc. Okay. Any questions on the market? All right. So for now, let's review the positions. Let's see. I think this week and next week there's just a lot of events, so you probably don't want to build new positions. You kind of want to defend the new positions. I propose be market neutral, right? We can go up 5 to 10%. We can go down 5 to 10%. So maybe too bullish, too bearish. If you say, well, nobody knows, we're just going to trade sideways, which is high likelihood. So you have 2 bullish, 2 bearish positions, right, out of the 4. Or if you're bearish like I am, maybe you have 3 bearish, 1 bullish. If you're really bearish, or if you're really bullish, vice versa. 3 bullish, 1 bearish. But I would not have all bearish position. I would not have all bullish position, right? Because the glass is literally half full or half empty. Just depends on your perception or your mood that day. All right. So I'm out of Oracle. Okay. CLX, right? So CLX did have a significant pullback. Let's go over the bullish position. Pretty sharp pullback. Again, it's fighting for the support level. It's highly correlated to the general XLP, consumer staples. I mean, interest rates are not moving, right? The risk in the market is that the yield is going to move significantly higher, right? So for now, consumer staples are building the bottom, right? In the past few weeks, it didn't really make new lows, right? It's kind of trading and at year-to-date low. Right, so it's not breaking year-to-date low. The risk is that inflation is stubbornly high, much higher than expected. Then the rates will break out to the upside. I mean, inflation did come in slightly worse than expected, but I guess not as bad as everybody anticipated, right? Not as bad as everybody anticipated. So even though 0.6 is a pretty big jump, but okay. I'm sorry, the expectation is, I think it's 0.2, it came in as 0.3. Not sure what this number is. But anyway, it came in within expectation, maybe slightly higher core CPI, but rates, at least as of right now, are not moving, right? So that means that technology will go up, and in theory, consumer staples should rally, right? So as long as there is no resurgence of inflation and consumer staples are extremely oversold, it should benefit XLP, it should benefit XLU, right? Utilities, all the safety asset classes. XLU should benefit because they're extremely oversold, and healthcare, right? Because all these asset classes, as of right now, are extremely oversold and staying at 200-day moving average. So that's CLX. PDCO kind of fighting for the 29 level, right? After the earnings, I closed the put. I left the stock. It's sitting at the 200-day moving average. Usually this is a good support level. We'll see if it goes through some kind of consolidation, right? And then recovers. But for now, if it breaks through the reactionary lows, I would get out of the trade. And that's the goal. CVS continues to trade higher, right? It almost closed the gap. Continues to trade higher, still long CVS. Waiting. So bullish on healthcare, bullish on Eli Lilly. right? Both stocks continue to grind higher. And then I do have industrial, PWR. PWR is kind of trading sideways, but it tested 200-day moving average, right? Still in uptrend and trying to defend 50-day moving average. So these are bullish positions. They are stocks, right? Most of the subscribers are comfortable trading stocks. So I purposely start having more stock position and helping showing how to manage some of these long stock positions. We talked about AT&T is also going through consolidation and trying to trade higher. It looks like KRE started pull back. Apple down 0.5%, Google down 0.5%, and KRE is sitting at the August lows. So I would keep an eye on KRE. Dow Jones is flat, Spiders slightly higher, QQQ up 30 basis points. Okay. So these are the bullish positions, CLX, and you can see them under positions or in yellow tunnel. You can see them in dynamic power trader. Just depends on which subscription you have. Out of Oracle. Talked about PDCO, we talked about PWR. So one way to hedge is QQQ, right? You can sell short QQQ. So you can sell short QQQ. That could be one of your positions if you want to defend, if you don't think that 50-day moving average will hold, right? If you don't think 50-day moving average will hold, and especially if you think we're going to retest the August lows, then selling short QQQ is one setup. September puts will expire worthless. October. If you're more aggressive or you're comfortable trading options, I do have 360, 340 put spread with the idea again that we will revisit 340, by end of October. So I do have October bearish positions on QQQ. Another way to hedge, if you don't, you can sell short QQQ, or you can buy PSQ, or you can buy SH, depending if you want to hedge using spiders or if you want to hedge using technology, right? If most of your position technology, then you do QQQ. If you're diversified, right, which you should be, if you're diversified, then maybe buying SH as a hedge. TLT, kind of, again, interest rates are sitting at the important multi-year overhead resistance. TLT is sitting at multi-year support. So we'll see what will happen this week and next. And then XLP will expire worthless. And I do have XLF. I rolled the September position into November. So still bearish on KRE and XLF in general, right? KRE is sitting at the August lows, right? Regional banks are under pressure, sitting at the August lows. XLF is decent rebound to reclaim 50-day moving average, but still, I think, weak sector. So banks doing better than regional, and Russell 2000 is weak, right? It's sitting at 200-day moving average, sitting at the August low. Again, that would be a bearish argument that, we're trading in a sideways market. We're sitting at the key support levels, August lows on a lot of the indexes or sectors. And if cyclicals give away August lows, I think the sell-off might re-accelerate. XLP tradable was a tight stop. I think so. I mean, obviously, I'm bullish on CLX. I've been bullish on XLP. I think this is, again, one of those over-exaggerated moves due to fear of spiking interest rates and the emergence of inflation. Probably want to wait for PPI data at least tomorrow, right? Because that could trigger that sell-off. But if PPI if the reaction to PPI is the same as a reaction to CPI today, I would say that then the support should hold. Any questions? All right. So it looks like I would keep an eye on transportation, right? That's usually fear of recession is translated to transportation sector. It's turning negative. Again, probably on UPS news. So price wages, with unions, whether it's UPS or top three companies and transportation sector, right? You have big pressure in transportation sector, right? It already broke through August lows and approaching 200-day moving average. So that's also bearish for the market. All right. Any other question? Thank you, Fred. What else? So Apple is under pressure. I would keep an eye on Apple. Where Apple is going, that's where the market is going. So it's kind of sitting at this support, 172, 173. KRE is, I would keep an eye on KRE. So value is flat. Technology is still slightly higher. Dollar consistently going higher. Let me know if you guys have any questions. And MJ is under pressure. Any questions about positions, hedges? I do want to finish today maybe at 9:05, a little bit earlier. So if you do have any questions, please enter them. CPRVA. Trading lower, pull back. All right, let's see if anything has changed. It's 8:52. Yeah, yield is kind of not going anywhere. TLT is not going anywhere. Dollar, so very mute reaction, right? QQQ is slightly positive. Spiders slightly. I mean, QQ spiders flat. Small caps are under pressure. Silver is under pressure. Oil pulling back. China's down. Gas down. Precious metals are down. CVS continues to rally. So maybe, let's see, maybe time to add to CVS. Did half of the position. At least it looks like I know where the bottom is, right? 66. So if we do revisit 66, 65, I don't want to be down more than $250 on $10,000 portfolio. So if you did half, maybe it's time to buy the other half. So you're kind of using dollar cost average. So the other, if you're doing options, what a lot of people do, they buy a call, right? You can buy, let's say, 65 call or 68 call and sell two, 75 calls, right? This way, you use ratio spreads to reduce your cost basis, right? I think I bought it around 74, 75, right? So if you want to reduce your cost basis, then you would buy, you think this 66 will hold, right? I mean, we could close the gap, reverse down, right? That's possible, or we can just continue going higher. But at least, you have, without taking additional risk, you buy, let's say you had 100 shares of CVS, you would buy another 100, one contract, and sell two contracts. But you need a large portfolio, right? For these type of strategies, you need large portfolio because 100 shares, $7,000, you probably need more than $10,000 portfolio to do that. But that would be a thought as CVS continues to grind higher. Bob, I did discuss CVS. I actually bought CVS. I mean, we do have confirmation. I would say the bottom probably in place. Probably will not break 66 as long as interest rates do not run away. So as long as interest rates do not go away, I think that's the bottom. So now I have well-defined bottom. I originally bought only half of the shares, right? That's kind of usually I do. So now I'm buying half of the shares because market is down and CVS continues to outperform. So I mean, you could have a kind of, there's two patterns, right? One is continuation, right? And we just continue to grind higher, right? The other pattern will close the gap, right, and going lower, right? So So I'm using dollar cost average. I bought it, I think, at 75. Now I'm buying at 71, kind of reducing my cost basis by half because I think this level will hold. But in terms of number of shares, you probably want to make sure that if we do drop to 66 again, let's say if PPI data tomorrow comes worse than expected, then you can, you're not down more than $250 on $10,000 portfolio. I would only do this if you did half of the shares, right? You're using dollar cost average. If you're not using dollar cost average, I would just wait, right? Either maybe close, right, just like you said, or just wait. If you have 100 shares, right? If you have a larger account, I would consider doing ratio spread. Buying one call and selling two calls. Over the next months, VIX, I'm bearish. Personally, I'm bearish. So that means that VIX should go higher. So right now, VIX is very complacent, right? It's sitting at the year-to-date low, kind of no perception of any risk. So, I think next 30 days, VIX should go higher. But, if you bought QQQ puts, it's the same thing. Just keep in mind, buying SH, buying PSQ, buying QQQ put spread, selling short QQQ, buying VIX calls, it's the same trade. So you want to be diversified, right? You don't want to have, out of your 4 trades, all 4 bearish trades, like VIX calls, SH, PSQ. I mean, it's the same trade. But I mean, if you have big gain on CVS, then in my personal account, I also add the puts. So one way to hedge, you basically says, okay, great, I'm 60% up, I can buy puts, right? And let it roll, right? If you're using options, just continue to roll. If you have stocks, if you have 100 shares of stocks, what a lot of people do, sell the stock, buy the calls, or buy the call spread. You still have the upside, but you have limited downside. So, there's different choices. I mean, obviously, it's a very strong rebound. Close the gap. Maybe it's going to go through consolidation. Ted, does VIX move before spiders? No, VIX moves together with spiders, right? VIX is, puts up on spiders. So if spiders are up, VIX is down, right? I mean, they move, in the same direction. Sometimes you have these divergences, but they're usually short-lived. If the market is heading south. I mean, lack of strength in XLV doesn't really mean spiders is going to sell off, right? Especially, I think XLV is slightly positive. It just means that market is cautious, right? It's not a typical bull market. All the safety asset classes, utilities, consumer staples, healthcare, they've been under pressure, right? They've been under pressure. They're selling off because of the interest rates. So the only good indication of where the market is heading is yield, right? We gapped up, retested the highs, right, around 434. We're at the bottom of the session. But I would say, this is the low, 407, right? We've retested this breakout level back in July, right? So this line is very important line, right? The 50-day moving average, the attempt to break out an interest rate in March on the liquidity issues in regional banks, then July top, right? August top, we finally broke out. As long as we're trading above this line, as long as we're trading above 50-day moving average, you're not going to have a strong rally in the market, right? So that's kind of my thought process. If you're very bullish on the market, I propose keep some hedges as long as we're above 4.07, 4.08. And for now, it's very muted reaction. There's no really big. You can see, cyclicals are under pressure, right? Regional banks, IWM under pressure. Technology is slightly higher. Semis are up 0.5%. So it's kind of no new signals, right? No new signals. Nothing that has really changed. We'll see if tomorrow reaction is going to be different. We do have 2 more minutes. So if you have any questions, I'd like to answer them today. Above small caps leading down. Airlines had bad report on fuel cost. All are down. Yeah. So jets, anything that's transportation, right? Whether it's airline or whether it's railroads, or this is an indication of economy slowing down, right? Usually, at least before the railroads, the transportation is an indication how healthy the economy is, right? And jets went from 22 to 18, 20% drop. That they're in bear market, right? They're dropped more than 20%. Mark, thank you. Mitsubishi Finance is so profitable. MUFG, thank you for sharing. Mitsubishi Financial Group, right? I think this is the IPO of what is it called? British Semiconductor. What was it? ARM chips. They're going public, and they are one of the financiers behind it. So yeah, very strong move to the upside. Very small volume, so just be careful. Not small, it's 500,000 shares, so it's decent. Thank you for sharing. Yes, they're in the news. Raymond, what would be the strikes to the ratio spreads on CDS? Usually when you do ratio spreads, you want it to be net credit or slight net credit or net debit. So I would go maybe November, right? I would go to November and try to buy maybe 167.5 call, right? And sell to 75. Right, and sell 275. So you buy 167.5, sell 275, and just make sure you get a credit. Let me just check the quotes. Trade option, CVS. So I would go into November. You can buy 67.5 call for $5.40, and you can sell 72.5 2 times. That would be $4.60. So you would have to pay 80 cents debit. You can buy, yeah. So I would buy 167.5 and sell 272.5, right? And the idea that as long as continues to go higher, you break even. Or you can buy 170 call, right? You buy 70 call for 370 and sell 275. That's probably better since our cost basis is 75. So that would be you buy 70 call for 370 and you sell to 137. Right? We can do that here. Right here. All right, so CDS. Trade, CDS. Option. November. So 70 call. And then 11/17, 75 call, sell to open 2. So you buy one for $3.60, you sell two for $1.32. You pay 90 cents. So you still pay 90 cents, right? Which is maybe 1.5%, but you're lowering your cost basis, right? If it does jump to 72.5 or 73, you're probably gonna break even as opposed to 75, right? So that would be the trade. If you bought at 75, now instead of breaking even at 75, you would break even. I'll have to do the calculations, but before that, right? And if it does roll over and it doesn't bounce by November, well then, you're down additional $80. And you can always go to December. Well, there's no December. You can go to the next year, and then you get credit of 12 cents, right? So if you don't mind waiting, till January, right? You just want to keep collecting dividends on CDS, then here you actually get in a credit of 10 cents. So this is truly, you're not taking any additional risk whatsoever. You're actually getting a credit, and you are lowering your cost basis. But November spread, 2024 spread. The downside is that 2024 spread will not move as fast as November spread, right? And you have to wait much longer. So that's the question. Is it worth $80 or $90 in this case, or But that would be the thought process. Thank you, John. Thank you. So Fred, hopefully I answered the questions on strikes. Let me know if I did. Let's see. I should try to make this bigger. Sorry about that. Yeah, so assuming you have 100 shares, I would do 1 to 2. You have 200 shares, you would do 2 to 4. Somebody might argue even if you have 50 shares, you might do still ratio spread, right? Because you collected 9 cents. Well, if you have 50 shares, there is a risk, right? There is a risk that, if it shoots above 75, at some point you're going to start losing money because you only have 50 shares. So you have to be careful with 50 shares. You would only do this if you don't think CDS is going to jump above, this level, right? Post-earnings reaction. Yeah, Adobe and Leonard tomorrow. Earnings, I'll look at them. Adobe, I'm probably not going to do it in personal account because it's not very liquid. Right? Same pattern as Oracle, right? We know what happened to Oracle. And it has some volume, and it's semi-decent volume, so maybe. But it's $547. So on the $10,000 portfolio, I would not do it, right? Because on Oracle, I'm off by 2 to 3%. Okay, I'm down $300, right? $250. But on Adobe, if I'm off by 2 to 3%, well, that's $1,000, right? So strike price matter, right? Most people don't realize that strike price matter when you trade in options, right? They think it's all the same, but just remember, one contract of Adobe is $54,000. One contract of Oracle is $10,000, right? And based on your account value, maybe it's inappropriate to trade Adobe. But if you have $50,000, okay, then maybe you can trade one contract. Leonard, $100 stock, it's semi-liquid. You can see home builders are rolling over, right? Not just Leonard, but I think as a group. So maybe selling calls makes sense, right? They're kind of too far, too fast. Maybe it doesn't make sense. Right. Meanwhile, we're fluctuating between slight gains and slight losses. I would keep an eye on IWM, and more importantly, I think on carry. I would keep an eye on carry as kind of a leading indicator. Carry and IWM, see if they hold these levels. Thank you, Bob. Thank you. Continues. Ian, I don't look at the pre-market volume. On earnings, when we did Oracle, yes, I always look at pre-market volume, and as I said, at least right now, the broker that I'm using to synchronize, they don't have pre-market orders. But I could have, in my personal account, I sold short the shares at Oracle did not just drop to 112, right? Most of the time it stayed at 115. So you had plenty of opportunity to sell short stock at 115. So I do look at the volume, I do look at the price action pre-market. If there is an event, right, earnings or PPI data, yes, then I do. But if I have CVS, it doesn't matter to me what, I don't day trade it. If you day trade in something, you definitely want to look at the pre-market, right? If you're planning to day trade, then you look at the pre-market volume and action, like we did in Oracle. Hedging Tesla with TSLQ. I mean, you can do it with TSLQ. You can buy QQQ put spreads. I would hedge position in Tesla or in general market. I mean, you can do it with QQQ puts. You can do it with inverse ETF, TSLQ. That's all fine. Fred, thank you. Mark, thank you. All right, guys, I gotta go. Thank you very much, and have a great day. And I'll see you tomorrow morning. Thank you. Discord. Thank you. See you tomorrow morning. Thank you.